Hey everybody, it's Shannon from alphatrends.net. It's Friday, the 25th of January 2019. Hope you had a good shortened week of trading this week. The market did lose a little bit of ground for the S&P 500. The big surprise was the semiconductors up 4.4%, but overall it was kind of a mixed bag here for the market. So let's take a look at the charts and make some sense of it all. Here's the S&P 500 on the daily time frame, and we've been hearing for the last several weeks that the market's at resistance or the market is going to find resistance, but so far we really have had almost no resistance for this market. It has really rallied strongly from the beginning of the year. In fact, if we take a look at the 30-minute time frame, here we can see here's our year-to-date volume weighted average price. We had a little bit of bumpy action as we pulled back and tested the December 24th lows, and that volume weighted average price held as support twice, first in December and then this January. But as we got back above the year-to-date volume weighted average price, it's been up and away. We are still seeing the same trend persist here. That is a rising 5-day moving average. Last week we were a little bit cautious, saying that a pullback wouldn't be a surprise because it was at the volume weighted average price from the all-time high right up here. So that's that purple line. That's the volume weighted average price from the peak. And so far, 2 Fridays in a row that has shown to be the barrier that it needs to penetrate to be able to continue to move higher. But there's nothing bearish going on here right now. You could call this a double top if you want, but the point is it won't be a completed double top until we take out this low. First thing we need is a break of a trend line and then a break of this low. Then we can call it a double top, and then of course our measurement would be the height of this pattern. So we would take the height of that pattern, subtract it from where it broke down, and that would bring us approximately back down to the year-to-date volume weighted average price. So again, there's nothing bearish about this S&P 500 right now. There's reasons to look at the market and say, hey, it's had a heck of a run here. I mean, up what percent are we? 6% year to date. That's a pretty good move, and it will need to consolidate either by correcting price-wise or to consolidate through time, or maybe a combination of the two where it does something like this and then can build and continue to move higher. Listen to the market. Don't listen to the people that say, hey, there's resistance. We only know resistance after the fact, and I've been saying that for decades. It's not a new thing. The NASDAQ also found sellers 2 Fridays in a row at the volume weighted average price from the all-time high. So last Friday and then again here today. We do still have a declining 50-day moving average, but the market is holding on. It is still above a rising 5-day moving average. That's that orange line. And what we saw this week was the volume weighted average price from this gap higher held as support twice so far. So that will be, we've got 3 levels to look at next week. We've got this little band of resistance near the 5-day moving average. If that fails, the next level it goes down to would probably be 161. And then if it's going to decline, it would probably do something like this. And then, kind of bounce in there and then head towards the year-to-date VWAP. But again, there's no evidence that the sellers are gaining control in here. We're above a rising 5-day moving average. We have the advancing volume-weighted average price year-to-date, and we can look at things and squint our eyes and say, hey, this must be resistance. But until the market moves away from that level and the sellers overwhelm the buyers, it remains innocent till proven guilty from an intermediate term time frame, and the same is true for the Russell. We bounced around in here around that 5-day moving average, but the 5-day moving average continued to advance, and we saw that the prior resistance in here did in fact hold as support. So that's going to continue to be an important level. First important level to hold would be 145.50-ish, then 143.50, and then we would look to that volume weighted average price from the gap on the 25th, on the what date was this? I think it was the 6th. Anyways, but then the year-to-date VWAP. So we still remain in a solid uptrend, and to try to bet against this, unless you're trading for very short-term time frames, just does not make any sense at all. The semiconductors have been a mess all over the place with these big gaps up and down all over the place. I haven't been trading them because they're just too erratic for my style. I don't like all that gap activity. But if you look at it, it's been contained within the 5-day moving average over here and then the year-to-date volume weighted average price. So now next week, we're getting a little bit extended. Maybe it pulls back down towards 93-ish. You look at that daily time frame, it blew past the volume weighted average price from the all-time high. Maybe it's heading for the 200-day moving average. It's very surprising to me that the semiconductors did as well as they did today, holding on to gains after Intel got hit. But the market doesn't care what surprises me. We have to look at it objectively and say, what is the market telling us? The biotechs continue to hold up. They've got some horizontal, what should be support in here. This is if we pull back from here, we saw this little peak, hold then as support, and then again over here. So this is our first important level, and down to the year-to-date volume weighted average price, which looks like if this market does undergo some profit taking, that will be an important first level to take a look at. Then of course we'll be looking at the volume weighted average price levels from the December 24th washout in these markets. What's really interesting to see also is how good that blue, that's the year-to-date volume weighted average price has been. First on those biotechs right there, we saw that from that bounce it held, and then if we draw a VWAP from that level, that was our low this week. Well, look at this. Look at the FANG stocks. Look at Facebook in the year-to-date volume weighted average price. Look at Amazon right here on the year-to-date volume weighted average price. Look at Apple at the year-to-date volume weighted average price and still holding above it. Look at Google. Look at Netflix. Netflix was perfect this week, finding buyers right on that volume weighted average price, and there was nothing else there to indicate there should have been buyers in terms of any moving average or whatever. If you're not using the anchored volume weighted average price, it's my belief that you're a severe disadvantage to people that are using it, because you can find out the true psychology of who's in control, the buyers or sellers. Thanks for tuning in. That'll do it for me. Have a good weekend.